Merchant cash advance debt relief for many businesses struggling, stacking MCA debt, not enough in available cash flow, not able to take on an existing, a new opportunity, and plenty more. Hi, welcome in. My name is Michael. I'm a business architect, meaning I know how to create, structure, form, design businesses from the bottom up, top down, fix, grow, expand, scale them. I deeply look at financials, bank statements, credit reports. I'm very introverted, the reserved, analytical, cerebral type, less words, more action. And I'm here going to show you on screen, as you see, I'll be scrolling down to go over things in the MCA debt relief space, what options are available, which ones are the fastest, which ones can take more time, which one would make most sense to you. Right here on the right-hand side, you can see there's a form. Let me shrink the top right here so you can see even more clearly and what I'm asking for. This way I can understand better your situation and see what would be a better fit. And down here, please describe in detail your hardships you and your business is dealing with, how bad is cash flow plans, etc. And the number one thing I look at when I'm helping businesses get out of MCA debt and get into other forms of debt is protecting your cash flow. That's the number one thing that I silently tell myself, protect their cash flow. Protect their cash flow. And I'm very in my head a lot doing numbers, mathematics, cash flow, profitability analysis. That is where my strength is, not talking again. And I'm here about to show you as I scroll through this page. I also have my site here, Viral Funding Solutions. This is the home page. Let me show you by scrolling down. I offer many services, one of which you're learning today about getting out of MCA debt. And if you're struggling, not taking a salary or not paying yourself enough as much as you wish, you're missing payroll, you're in default, you're unsure about who and where to turn to, I believe you've come to the right place and person. I've been doing this for many years. Let me show you down here just some results, and then I'll scroll back up from the top down and we'll go through. See some of our funding results, an automotive and vape shop, business and businesses that enrolled in debt restructuring, a concrete construction company, Mexican restaurant, cuisine. There are many others too. And you can see as I scroll down here, there's more about us. It's your money. Go ahead and clear your debt before it's too late. The debt restructure program we have is very popular right now, but requirements could change at any time and you'll find it harder to get. Look at what's happened with the SBA, idle funding, PPP funds. They've changed and they're gone. And you'll lose your chance to put the cash flow you have to work for your business and for many more reasons. There are bad programs out there right now more than ever, and especially in the debt consolidation, debt refinance, debt restructuring, settlement space with predatory lending guidelines and lenders, providers, people saying this and that and not getting people out of their MCA debt the way it's supposed to be done in the process. And that will tell you to default. So you have to be careful of the service and services out there with the company, organizations, the broker, agent, referral partner, whoever that is working with you. And do you want to be that person sitting on your couch thinking, I could have, I should have acted on that and sooner. I got in, but not fast enough. Or the one who said, I did it fast enough because this is my main priority. I'm not putting it behind me. And if you're saying this is a main priority, then you act on it clearly and fast. Or is it something you just put behind? And when I get to it, I'll relieve my MCA debt. And it's okay, it's manageable. I just wanted to see what was out there and what options are available. Or is it something that you really do prioritize and you're not wasting your own energy and time as well as anyone else's? Down here about myself, business loan broker, funding expert, overall business architect, like I mentioned earlier. I have a very CFO, underwriting, engineering mind. I was a chemical engineering student. Chemistry is my favorite class. And then I went into business, got my degree as I wanted to start a business. So you see that there, my social media. here just showing you that I am real. I am a legit person. I sometimes do a spontaneous live here, and it's an open room for anyone to ask me questions, business funding, business development, marketing, sales. I'm not a salesperson uh, by nature at all. I get when you're in business and you're an entrepreneur, you are doing sales, but that's not my strong suit. So you don't have to worry about that. I won't be spewing things in your ears and a melody and a harmony to make it all sound nice. I'm not like that. I'm not saying I wouldn't say anything that's nice. I'm saying that like how a salesperson does talk, and they a lot of the times can be very transactionary. So you have to be very careful. I also have these documents right here. I'll flip to this one and you can pick it up on this page right here underneath the video. You can click right here. There's a video to watch. And then you want to see the document, click here to see. It'll be underneath right here at the bottom. And next to it says click here to see. You open that up. It has everything most up to date. And I can email you the same thing. So when you fill out this form right here, I'll better understand your situation, what's going on. Based on the answers, I'll know more. I don't have a credit question on there. I could add it, but in time I can ask for it. And I'll email you. So I'll analyze what you have. And usually I send this long email, customized, very helpful to you so you can see in bullet points what are the different options available. Why would one make more sense than the other? Where is the best place to get started and why? And I'll be covering some of that today in this video too. So I made another video, just so you know. Business funding is important, but understanding business operations, cash flow, and growth strategy matter more. Hello, happy Friday. And this is when I took a lot of time and I put this together on a Friday some time ago. I hope you're doing well. I spent many years in the funding finance space, and one thing I've noticed in the business lending field is that a lot of agent brokers, people may know their funding and may not either in their products they offer, along with their approvals, the rates, what the lender requires, and plenty more. But many, and I mean a lot, don't understand businesses themselves and business at a deeper operational cash flow growth, contribution margin, management, cost control, running costs, and so much more business numbers, math, customer acquisition cost, lifetime value, business calculus, additional profit and additional sales, operational efficiency, lean, running lean, what does that model look like? Pivoting. There's so much more that I go into in this post that I won't spend time on today. I made another video on it. I may link it down below in the description, but I wanted to show you that just so you know and have some concept in context that I'm not someone who does things at a low level. I've been doing this long enough. I'm an entrepreneur. I have multiple companies, corporations, many different types of businesses. And where I was before I got into the finance funding space, I have helped people get into cash advance debt when it makes most sense. I'm not saying not to use cash advances. There's a place and a time for it. Don't get that misconstrued and misaligned. That funding should be used not solely just to increase double, triple, quadruple down on increasing your revenue, but for having some operational cash flow efficiency. I'm not saying it'll overall help you with that. Other businesses it will, others it won't, a majority of the time. It's used as bridge funding for something you can generate more revenue with, but sometimes sales are, and revenue goes low and it's a seasonal pivot point. Something happens where a machine breaks down, equipment is not accessible, inventory is locked up, your receivables don't have any enough inventory, equipment to do a sell leaseback, to do a cash out refinance, and do plenty more. And so a lot of businesses get themselves in that situation where they end up stacking just so they can cover their payroll, just so they can cover emergency costs, and things are losing out in terms of profit. They're trying to replace it by using a cash advance. It's very expensive. Many times when you try to amortize it, you get 40, 60, 80, 100% plus a lot more than just 100%, 500%, 800% and above. And you calculated looking at it, well, you have weekly on a running weekly, daily, and you can amortize it. In many places, you wouldn't call it a loan, call it an advance. In others, you call it a loan, but that's what I think of it as, and it should be, and it really is one, is a loan. And they can feel and be very predatory. So you have to be very careful in understanding your business entirety. And that's what I do and I step in as. I don't just help you get funding. It's not only cash advances, it's bank term loans, FDIC bank term loans, general term loans, SBA 7A, 504 loans, express loan, creative credit-based funding with multiple 0% interest business credit cards and or a personal term slash installment loan used for the business with a 5 or 7 year term. To be able to consolidate MCA debt, that's one way to do it. There are others which you'll learn about here. And when you fill this out, I'll send you an email after I've analyzed and I take the time to understand your business and what you do. And I've seen many businesses getting them out and into funding strategically, being a strategist. And that's what I can do for you overall. There's so much more that I do: private equity, private debt in the crypto space, investment opportunities, and so much more. I'm in the market, economics. I have my Rolodex, and I'm someone that you can count on. I'm very trustworthy. I'm not one for words. I said in trustworthy. I am trustworthy. I believe I'm a very humble person, easygoing, non-materialistic. I love to read. I have books here in front of me. I love to fish, and I'm a family man. Very simple. So down here, you'll see a video. You can access again the document, which is over here for one specific situation with debt restructuring, which is commonly used to help lower payments by 50 to 75% on average, and also looking at the face value of the total remaining balance too, and hoping to reduce that by more than an average of 25% net of all fees. So it's not just looking at what the total comes out to be monthly and reducing that by 50 to 75%. Most of the times you can look at it and say, well, can you slice that payment into three, and that would be your new weekly payment, and you have something restructured, or it goes into settlement. Restructuring is a better opportunity to go with. So it's something much more manageable, and you can open up cash flow and have much more savings and cash flow. And that's how you got to look at it a lot of the times. If you can't do an MCA debt refinance consolidation with a bank term loan, a general term loan, with an SBA is not going to work right now because they've stepped out of that space. It's just too much for them. There's a lot of defaults, a lot of foreclosures, bankruptcies, a lot of things that are going on in the MCA space, and it's just unmanageable in so many ways. And if you're just again sick and tired of that and it's time to act on it and you're serious and you want to work with an expert and a team of experts too, who will along the way help you, guide you, look at your file too closely and know what is best to do, then go ahead and go forth with this. But again, understand, please be energy and time efficient. I've been doing this for a long time. I'm extremely organized. I compartmentalize very well. Not one for words, but you hear me here, and I'm trying to give you as much information and knowledge as I can. And I have here what is debt restructuring in case you can't do a consolidation. As I mentioned, it's not a new loan. It's not a reverse debt consolidation, which is too expensive, adding expensive debt on top of already existing debt. It's a cash advance, adding on top of a cash advance just to replace your payments with one or more. And you don't want to be put in that situation when you're already in more than one MCA position. And a lot of times, reverse debt consolidation wouldn't work if you have too much already in positions and the total amount of remaining balance. And so I go over here through the eligible for restructuring or settlement if you have at least a minimum of 50,000 in MCA debt and or MCA like debt. Think of that as other factoring lending products. I won't start naming the names of those companies. I have them in mind now. You can imagine who that would be. And or $1 million in total debt containing other business debt like business credit cards, bank loans, tax liabilities, etc. Sometimes we can include the business credit card debt in the MCA restructure, but that will negatively impact your credit. And if you are in enough pain, though, this is what you got to think about, which most business owners don't think about. And it's another thing because most business owners are not financially savvy. Their financial literature is not there. I'm not saying like the person's not worth anything. I'm not saying that at all. I'm saying that as a business owner, I understand when I first got started, I wasn't financially literate. I was learning business. I was in the digital marketing agency lead generation space. And in some months after I got some things going, I wanted to do something on the side passively too to build. So I started building a health business in the affiliate marketing space. And I still have those till this day. And so I was learning along the way. I was taking the energy and time aside to learn more about financial depth and accumulating that knowledge and putting it into use, not just learning it and letting it sit there or digging it back up, to come back to it. So having management of your cash flow, understanding where you should deploy your cash flow and what phases, what's your contribution margin, what's your overall total net free cash flow, because there's different ways of looking at that, and seeing what percentage do I have to set aside for reserves, and if I could get more demand today, would I be able to support and handle that? Would the cash flow be able to do that? Am I growing too much at a fast pace where I need to bring in more people, but I can't hire for skill? I don't have a leader to take over one or multiple restaurants or more roles in my company. And so I have to show up. And when I'm not showing up, I expect something of someone else. And if they're not showing up, I have to train someone else, and that's going to be a higher cost. I have to pay them more in wages. I got to look at the raw cost, the materials, cost of goods sold, cost of sales, and everything else that goes into the inputs and the outputs of a business and at the time that it happens. That's the biggest difference, is when you have short and fast conversion of cash flow, cash conversion cycles, short to long-term cash flow cycles, it determines which service of funding is your best product. And even if you can or can't qualify for it, which one makes most sense? And going from there, how much should you take on at one time? Should you spread the yield to different products over time? This is what you should do. You should have a contract for your construction company. Then this is what we should do. We should look at it like this: is it a small? Is it a large one? Is it inventory, receivables, purchase order? It's so many different things. So right here, if you are in pain though, and you shouldn't care about whether your credit is affected because you're trying to get out of this, if you're going through a restructuring. If you are doing a refinancing consolidation, MCA refinance consolidation with these term loans, bank term loans, the 50,000 minimum does not apply. For many years, it was this: you have to clear over 40 to 50% to be able to do a refinance and or a restructure. You hear the word sometimes being said in the cash advance space, but a true restructuring is not going back to your MCA provider and seeing if they can lower the remaining payment and giving you a good 2 weeks, 2 months, and then being able to come back, and you have to have the same payment agreement that you had in the beginning when you had your contract signed. And so now you're back again, and you're floating debt around, and you're trying to float money around, and you can't make it in other places. You have to lose jobs that were so important. Jobs haven't been finished. Your manufacturing process, you're not small batching. You're starting to increase your capacity, and because you're trying to get a lot of productivity in, but that's not right and so conducive to what you're trying to do in your overall strategy, just to make up for the lost debt and lost profit that's going to the cash advance company and companies. So there's a time and a place for the cash advance and cash advances when the benefit exceeds the repayment, the cost of the capital. Don't use it so much for payroll, for just having operational cash flow on hand. You could use it if you really absolutely needed it, but you know you have a strategy to rebound. But using it a lot of times for doubling, tripling, quadrupling down on revenue is one main reason people use it. But that's not enough. It's more than that. It's about your cash flow. It's about looking at your overall strategy, the continuity of being able to have that revenue stay stable after you've increased and or continue to increase the revenue from there. And if it were to drop, what is the biggest constraint, primary and secondary constraint that you have to be prepared for? The risk mitigation, risk management, all those kind of things you have to pay close attention to. So that's what I have here. And in most cases, the credit isn't affected, but when you're enrolling things like business credit cards and stuff like that, that's where you can see it in cases. But like I said, you're doing the restructuring. At that point, you have no other option. Don't want to go through a bankruptcy and don't have to do that. That's the last thing that I would recommend. Absolutely wouldn't have to. You want to protect your legacy. You're passing this down to someone else. Somebody has it already, or you plan on other things happening before you close, then you need to get the most out of it. Then there are other solutions to look at. So again, if you're doing a refinancing consolidation, the 50,000 minimum does not apply, but for many years, it is full 40 to 50% clear of that debt to be able to refinance it. Now, a lot of the times you're seeing you don't want to have more than 200 or more than 250,000 in cash advance debt a lot of the time, and no more than two cash advances at a time to be able to refinance and or consolidate. And it's become a lot harder to consolidate that debt because people go right back into it. And so you got to pay close attention to that. And that's why a lot of banks, a lot of bank term loans alternatives to the major A tier banks and term loan lenders will not give you a refinance and consolidation because you're over leveraged with the total amount of MCA debt that you have. No minimum FICO score is needed for the restructuring. No collateral is needed. No upfront out-of-pocket fees. No negative how to say item. No negative impact to your personal or business credit in many scenarios. There's a typo I just noticed right there. I gotta put a no. I was editing this a bit, and as you know, when you edit things, sometimes something doesn't appear right. You can catch it right there, which I usually do, but I'll go back in there and put the oh right there. No negative impact to your personal or business credit in many scenarios, like I was stating. No new loan. This program is a way for you to drop your cash flow, uh, leverage your cash flow, meaning you drop what you have been paying consistently to the cash advance company, the funders, and you open up the available cash flow. That's what's happening. You're dropping the cash advance and the cash flow is being available, not the cash flow being dropped. The available cash flow is to resurface, and that way you can deploy for what you need. Think of it as almost getting a new loan, but it isn't. It's you're getting your cash flow back so you can put it into your inventory, you can put it into other places. Now you have that available, you're saving consistently with cash flow every single month. You're getting that back in return. It doesn't have to be generated from new revenue, new scenarios, new entrances into the market, new other ways to look at and see what your competitors are doing. So a lot of the times the restructuring is best, and it's the only solution for many businesses. Quick and easy application process, customized offer, term sheet, closing call within 24 hours most of the time, as long as you have it's how fast you want to move to. I always say this, even if you're getting an SBA loan, I know those take long. Sometimes they can be faster, expedited, express, and other ones. But if you don't supply the documentation, if in between the time to get to the end, the finish line, to start the program, it took you long, that's on you. And there could be good to great reasons, and it may not be. So that's as fast as you want to move to, and it can be done relatively quickly, as you see right there. Aside from MCAs, here's other debt that can be restructured, determined on a case-by-case basis, government loans, vendor debts, all the way down here to any secured business debt. And that's on a case-by-case basis, but we're looking at MCA debt, and that's our focus. And getting an attorney-led debt restructuring team, a specialty law firm, that's what you have besides you and you can look forward to, and having your business protected at the end of the day, harvested, growing in the meantime, graduating through a program, getting out, then going into a better, more sufficient service like a bank term loan, business term loan, SBA at that point, creative credit-based funding, and other loan scenarios that are more strategic and for you to leverage its highest capacity and have a lower weighted average cost of capital. And if you need operational working capital longer term because of your cycles and fluctuating cash flow and so much more, then sometimes the longer term makes more sense. But if you can pay something fast enough back, then you do. And it could mean having something 2, 3, 4, 5 years instead of having something 5, 7, 10+ years out. So with an MCA debt consolidation refinance scenario, I'm going to break that down, and I'll also send you this more or less in an email. I have a Google document you can pick up down here. I can also send it to you in an email, all organized as like a welcome package email. Think about it that way. You're going to get the bullet points to all different services or more of them. And restructuring is one of the most recommended ones to go to. So an MCA debt restructure is the absolute best option and solution when you can't get a new loan, or it doesn't make any sense to just quite yet do this with an FDIC bank term loan, business term loan, general business term loans. SBA 7A has pulled out of the refinance consolidation of MCAs. As I said before, these new loan options take stronger cash flow. You want to see a base of a 1.25x and above on your debt service coverage ratio. So when I look at what your annual cash flow, your monthly cash flow is, I can look at these things through tax returns. You have the monthly cash flow from bank statements too, and you can look at the monthly debt service through bank statements to what are all the payments being made, arrange that as to, and which ones are consistent. So it shows up as that kind of debt. I'm looking for consistency. I'm looking for one-time payments and average daily balances, starting and ending balances. There's plenty more that I do an analysis and my own numbers on to see what is possible, what's the monthly debt capacity that you have available, and so much more when it comes to the math side of things. And that's what I love most, being quiet and doing my brain work. I do a lot of brain work my first 4 to 5 hours, in the day so I can open up and do things like this and make a video, show up on a spontaneous live, although I don't like to be on video. I love processes, systems, math, but I do it because of you. And I want to help you get out of this MCA debt, get into better solutions. Or if you need it, I'm not going to be the person that says, don't do that all the time. If you had to take a cash advance and you absolutely needed to, do what you have to do. In the time that we're going through this, mostly in the restructuring. That's the restructuring process. Like you had to do that before you got started. Do what you have to do. But I don't recommend getting into another cash advance situation just so you can then come back and say, oh, well, I have to owe so much. They're coming after me. I'm facing a default. I'm close to, I am in one. I'm in multiple defaults. These liens, these judgments, confessions of judgment, there's just so much that you have to look at and pay close attention to. And restructuring is usually one of, if not the best solutions to get out of a lot of this and in time, taking time with it. So the 1.25x going down to 1.15, as low as 1.0 in some factors, considering situations and factors. Average daily balances, negative, non-sufficient funds, strength of deposits, types of deposits, the withdrawals, inflows and outflows, and timing gaps, and so much more that has to be paid close attention to. The revenue, type of revenue, consistency of that, strength of it, and more. Reporting a profit helps, and the stronger the better, but it's mostly cash flow based. Profitability does support the case and getting even more in terms of funding and debt capacity, but that usually comes from the cash flow side. So mostly cash flow based, credit at 660 plus FICO. Most lenders don't just look at simple average scores. They usually review all three bureaus, and some may focus more heavily on the middle score or specifically Experian, or they will use their own internal underwriting model. Beyond credit, they also heavily plug in and factor in the cash flow, as I mentioned before. I look at that too. And on the back end, existing debt, utilization, time in business, and overall the financial strength, or 680 plus on all three credit bureaus. And then there's another with 640 plus on all three consumer credit bureaus with a FICO 2 check, although most lenders are going to look at everything now. And you're looking at even FICO 10s, FICO 10Ts, and even different scoring models now a lot to base things off of what's going on in different industries, what's going on in the home mortgage space, the auto loan, personal loan debt space, because they have much more data and much more borrowers that you're starting to see. And a lot of the times when you go to a bank, they'd rather lend you more on the personal side than they want to lend you on the business side because it's a higher risk on the business. And if it doesn't have a lot of time in business and longevity and proven structure, infrastructure, that's why a lot of the times there's a higher risk and defaults, missing payments. But on the personal side, if they want to lend you more or they want to lend you more often, is because there's something that's been there for a much longer history. And your credit report, you can tell much more frequently installment, creative credit, credit, revolving accounts, and accounts, and just so much more a lot of the days that you see. But harder to get nowadays at a 640 plus type level. But that's something that we look down to all the way down to a 620, considering factors. Again, like I mentioned earlier, but that's even hard to give access to, especially when the cash flow isn't there. For an MCA debt refinance, it would need to be a max of two MCAs, like I mentioned. No more than 200,000 is the case. I've said 250, but usually it's 200,000. If you have 500,000 above, over 500,000, there are those like family offices. So if you have that MCA debt that's over that amount, I can look at that side and with a third party team on it to look at and see if a family office would be best and makes most sense to cover you and to get something better of a loan, term, an agreement, an arrangement, better accounting. There could be a lot of different situations to look at and getting the relief you need for your MCA debt. So there are solutions for that side of the equation too. And a lot of times, if you have more than two MCAs, it's not even worth going through and trying to do a bank term loan, business term loan. Well, they can try to clear two. We're going to look at everything. They're banks. They're going to underwrite on it all. And they're going to try to make the most that they can and offer you as much of a loan that they can because they're incentivized and they need to make the most. And then on interest, what you're paying and all that stuff and what they're using that as. And there's just so much notes and banks and a lot of different things that happen. So to hopefully find a way forward for a positive outcome, that's the reality of the economy and the market outlook these days. And like I said, I'm in the market. I'm in the economics of things. I have a close network. I can send messages, texts to emails back and forth. I'm not one who spends time on the phone much. And you'll see like what I send you an email, you're gonna think, whoa, yeah, they know what they're doing. I've been doing this for a long time. Overall, 13 plus years, time in business. Overall, my longevity of it. And at the time of you watching this, years could have passed, and it's more than 13 years now. And I know what I'm doing. My processes, my systems, very efficient. It's normally the person that holds us up. And what I've encountered, and I mean this kindly and respectfully, I'm giving you my brain right now. I'm giving you like a quiet person is telling you this because most people don't. And it takes a lot of courage for me to do this and tell you 13 plus years, I've learned the marketing, I've learned things in entrepreneurship that most people don't even get to this level at. I have multi-million, billion-dollar equity projects, valuation projects on my hands. I've been able to participate and lead and help in, do the pro forma, detailed project budget, do so much more on the finance funding side. And more than that, I look at the cash flow, I look at the business model of a company, I look at what they could be doing more of, what this look like if they had to pivot? Is it a technology pivot? It's not. Are they understanding that they need to record this data, the measuring of it? I look at everything, numbers, operational builder, high intensity when I do these things. I know what I'm doing when I'm building websites, funnels, the email marketing side of things, the automation, if there is automation, how much of it is needed. And that way you can run different models in your business, a low ticket, mid ticket, high ticket, residual income type of business. And understanding that I do know a lot of businesses. I've seen them all literally, unless there's a subset of it and a different variation and deviation of it. Okay. So you see that there with this, and the market outlook isn't looking any good. Banks are already tight with liquidity. You're looking at the Federal Reserve System, the bond market, the treasury side of everything, and the equities, the crypto. And there's so much more that I can get into and spend a lot on those topics. But I won't do that for this video because I want to continue along and just know that I see it on the micro macro level. I do. The housing market, commercial, residential real estate, on the personal, having personal real estate, commercial. I do that too. Real estate lending. I have my lenders in that space, traditional, conventional, private real estate lenders. I have the Rolodex of them in all services. So if you're asking which ones I do, it's all of them. And I started with some in the beginning, focused, and then I went, and I'm not a jack of all trades, master of none. I've mastered, I've specialized, and then I've grown in my skill set. What I do is a science and an art. I can't explain it well in my words. It's just something I have been doing. I've been building the muscle quietly. When you're in silence for so many years, over a decade, when you spend over a decade yourself, not with anyone else, just building a business and multiple businesses and knowing what it's like to be alone, left alone by yourself, trying to just focus because that was your decision to focus silently on working, mastering your craft, which most people don't do that. They just go into, hey, I see that your business is generating 50,000 a month. It looks like you have a strong business and you've been in business for some years. Nice. It looks like we can get you up to 80,000. And what I would need are 3 months of bank statements and da 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 da. Do you see how that goes and what they do? I don't talk like that. And I'm not transactional. And it's hard for me to speak to people. It is. And I do what I can and the most that I can. And when you have that email, you can get started from there. There have been people I've helped where I've never been on the phone with them, honestly. They followed me all over social media. They knew about me. They watched my stuff. And at a point, if you needed it for clarity, at least you have the email to look off of. We're not having to do everything, spend so much time on the phone. And you just understand, yeah, this is for clarity. And yeah, I just had a, okay, thank you for the confirmation. I just wasn't sure. And I help a lot of people. But the thing that holds this whole thing up again, like I said before, is the human and the human element. That's why I love numbers and data. Even if they let me down, I know how to pick back up as well as I do with humans. But the hardest thing are humans. And so I'd rather work with numbers, be on the back end. That's what I do best at. I'm better on the back end stuff than I do the front end stuff because that's what's hard is the human element and the person holding themselves back because it has a lot to do with values, vision, mission, morals, purpose, governing principles, ethics, character, and characteristic traits dominantly on that. And not saying you have to have all that in the highest standard structure discipline like I do. I've just built it over years, habits, routines, my process, care for what I do, and I care about you, the person, and then the business. That's how I look at things. And a lot of times others don't. It's like they just spew, oh, blah, blah. I'm just an everyday person. Like if we were together, I don't think we would even be talking about this kind of stuff. It's just an everyday, oh, it's a friend that I have known for so long. That's who I am, man. I'm being very honest with you and very easygoing. I know what I'm doing. I'm in the market, this industry heavily as well as others. So I'm constantly aware of the updates and everything going on. So to see if these consolidation, refinance situations would work, you can fill out the form above and I'll share with you more in time. And you can also pick up my free Google document here for the FDIC bank term loan option and more. Unless it's not available, unless I update this page or change things. But right there, I'm putting it all out for you. So there's nothing hidden, nothing hidden. And in this document over here, nothing hidden. So when you go through here with the restructuring, you know that this is a different document for the than the other one I just went over that you can click on, and you'll see everything right there. Look at that from start to finish, everything, examples, situations, what you should ask for when you're going through the restructuring process, and when you communicate with a payment analyst, for example, before you get started, and even after, in the beginning, before you get started, with things like, do I get an itemized return, an accounting report? Should I change this process before I get started with the program and things like that? And so you'll see everything that you need to. Obviously, I can't cover it all in one video. And for this one, document again, it'll be at the very top up here. Let me scroll up right here underneath the video, unless I change the format and where you can get access to it. I'll also send you a copy in the email so you can understand what you're getting access to and the different options. And I'm telling you, nobody does this the way that I do. And I have just mastered my craft in the best way that's most energy and time efficient for you and I. Again, it's about being energy and time efficient. And I have many people who don't think too much about it and get started and they're happy they did and come out of it happy. There are others who take so long. They say one thing, they do another, they don't commit. They're lying. I know they are. And others who it's hard to pick up on that. So I do my due diligence on who's this person, who's the human being before I even reach out. Like I want to know, do they have a LinkedIn profile? Can they easily be found on their website, Facebook? Like I care to know what's your background. If there's an about me page, I get some understanding your social media because it's hard for me to trust someone. It's not that you can't trust me. It's not like that. And I get it how it is that you have to be cautious of people and things. I get it. With me, that's no shouldn't be any concern. You'll find out if you haven't already. If you haven't through this video, your first time watching, seeing what I do and who I am. You've been following me for some time. I've helped you, or you haven't gotten funding from me, or out of funding. You'll know at least the kind of person I am and my strengths and my values, my characteristic traits. And right here, PS, there's also using a 5 or 7 year personal term slash installment loan used for the business to consolidate the MCA debt, whether it comes from a bank, credit union, a private syndicated lender and lenders, things like that. But usually a bank, you see it a lot of the time. For the business to consolidate the MCA debt with 680 plus credit needed on all three consumer credit bureaus. There is using AR, account receivable financing, inventory, cash out refinance, and other options, which again, I'll send you in an email, which is like when you look at it again, finally, or thank you, I have something and someone who laid it all out for me. My goodness. And when you look at it, it'll be a lot, but take your time. I'll guide you through the email and you'll see. And why it makes most sense. What would you get started with? What are the options? What is the strategic path and route to go down under and over and bearing on your situation, cash flow, profitability, based on the structure of the operational side of your company, and so much more. So I'll email you with what I see and give you a full list of options very specifically so you have full clarity and confidence in what you do and how to act fast. And this way, you're not also like, well, I could get a consolidation or refine. I see it so much. Like, can you? Here it is. Yeah, you can. Let's try. I know it won't work. Let's just try to give you a peace of mind. And then after that, we can go to the restructure. Or in the meantime, which is what the smart thing is for you to do, is go through the consolidation, knowing that it likely wouldn't work or wouldn't be the best solution, or try to maximize. And now we go through the restructure. So filling those details out in the meantime while you're going through consolidation, which can take some days, weeks. And if you know within a couple of days whether you're approved or not, that's fast, but it can take weeks to get something. So if you're going over here and weighing your other options, and by the time you even get a response to can you get funded, like if that took some time too, you have to also look out for that. So the key benefits of working with us and more details, experienced staff, fast response time and time to approve, expertise that's certified there, attorney-led debt restructuring, specialty law firm, character-driven, great reduction, reducing percentages on average, and then the face value. Trying to extend the terms if possible. It's what you can do. There's other ways of looking at things as well. And the restructuring is not a new loan, like I said. It could be a 6 month, 8 month, 12 month plus thing, depending on your cash flow and the structure of your business, what makes most sense for you to pay towards the program. And those are escrow based. The settlement and the restructure are both escrow based, and they build up a reserve. So you make a case, and the attorney by that restructuring team can make a case that this is how much has been built too. So for the lender, the funder, they can say, okay, well, they do need relief, and we know they can come to the table with this and this much. So that happens a lot of the times when you expect something different, and it's very safe and secure how this goes through. And like I said, always asking for an itemized return, accounting report, very huge there, and so forth. So you can at least know, like, well, what was going in at what time and all that stuff. So you have proper details of where things are, timing, and so forth. Enter your information, review your submission, moving forward. At a point through the restructuring process, I will analyze. I'll go to the third party. You'll see that when you submit the application, things like that. This is my very own, but you'll see an application there with the third party, and I'll review. They'll review. I get a green light. Okay, I'll come back to you. I'll send you an email and or text if you're okay with that, and we're on a text by text basis. I can give you a call, but it's quicker a lot of the times for me to email and text. And so at that point, I'll say, hey, looks good to go. It's in good order. I'll look at it. By the way, when you submit things, I'll go over what those things are needed to be submitted for the restructuring, which are the business debt schedule, the application for the restructuring, excuse me, for the restructuring, because I said twice. Application for the restructuring, the business debt schedule, the contracts. So I'll say like how you should search for them, DocuSign, don't go to the MCA provider, their antenna is up and all that. You don't want to do that. So an email, I'll properly say how to. And then from there, you have the last month's bank statement and the current month to date. And then there's more I asked for that you'll see. And that way I can do a full analysis, look at your cash flow, look at what the balances are, the original amount, the amount of the payment, structure, and all that. And so all that green light, you'll be able to communicate with the principal, who I know well. I've spoken with many times, people I've spoken with many times, and they'll kind of go more or less of what I've communicated, how the program will work, how things will go. And another thing you have to pay attention to is if you look at how much you have your outlays going out now because of the MCA debt and any other kind of debt too, and what you have to do to have other payments go out, withdrawals, etc. I always want to make sure you have enough of a budget. So I ask, how much can you budget towards the restructuring program weekly, monthly, set aside? So if you know your payment structure reducing by 3 times splicing the payment, 50 to 75%, looking at the face value, reducing that to having a total savings off the total debt balance, off the total monthly, what you have there, reducing that and helping you have a monthly savings of cash flow that you would have had if you wouldn't have taken the MCA debt, or at least 50, 75% of the way there, etc. Other cases, it might be less than 50% because of revenue. How well is the revenue protected? And the lien letters, Fortune 500, 5,000 companies, AR receivables, intercepted easily. How are you collecting receivables? How's the factoring company collecting and from who? There's so much more that you have to pay close attention to when it would and wouldn't work, but it's become more open now. So even if you have these Fortune 500, 5,000 companies where you have these account receivables with, and they don't want to be bothered, so they're going to honor the lien letters from the MCA funder. There's nothing you can do about that. And now the attorney-led restructuring team can't come in and protect the revenue because that's not going to work. It's going to be forced to drop the revenue in the business. But there have been cases now where even with that encumbrance, with you having more than 20 to 25% of your receivables, over 20% usually tied to Fortune 500, 5,000 companies is, yeah, there's still a case that can be made and still get the help possible, even over 20% in a lot of cases. Other times it may not, but you'll still see that is possible. You have here the payment analyst walkthrough, excuse me, that when after the principal communicates with you, then you'll be able to communicate with the payment analyst. At that point, you'll have more information. You'll have the payment analyst with more information to go over your file, understand things. Then you could be sent over like a contract, something that e-sign to move forward. This is what you would like to do. And most of the times people will continue and they'll start with this. And step six is then done. Other times it may go right to the payment analyst without the principal, but you'll see a lot of the times the principal then to the payment analyst. Uh, and yeah, down here, like I showed you before, see some of our funding results out of through the restructuring, just funding right here with clients, and then more. I could have put a lot more results, but I just put a handful of them right there. Click right here. You'll go back up to the form to get started. And again, down below here is more information. When I go over to here, again, this is the document that you'll see right underneath the video, unless I change things and how it works. You'll see right here how I have details. An introduction, what most people think they will get to wipe out their MCA debt, like I was going over the refinance consolidation, the expectations of that, introducing the MCA debt restructuring, usually your best path forward, and how that works. Over a 90% approval rate, lowering the payments, dropping that by an average of 50 to 75%. So I'll adjust this now because I made some edits not so long ago. And I have a few of these documents for my own, and just one you can have. I can use the same one though. And so you see that right there and the way things work as an example. There's different ways about this when you do restructuring. So I have all that right there. No minimum FICO score is needed for the restructuring side. And also one thing to note, I'm not saying you exactly have to do this or it will be the case always or most cases is when you do a restructuring and you're current on your payment and payments, a lot of the times to show financial hardship, missing one, two payments or so makes a case. A strategic default is one. Not saying that that's going to be the thing that you absolutely have to do. That's something that you can communicate with the payment analyst more on at that point. And if you're not current on your payments, it shouldn't matter because you're already falling behind. There's already a strong enough case to be made that you are behind and you can't make these payments. You can't go through another modification. They won't allow that. You've done a modification already, reconciliation. And to do a true restructuring is going through this. So it makes sense to do this a lot of times. And then another way is too, if you have a current processor to not have the MCA funder intercept those payments, again, is often recommended in having to change a processor. So if you're with Square, you're with others, you're taking advances through there, that type of debt through Square is also eligible because it's looked at as an MCA. And so that's another way. But just understanding not to continue to put more fuel to the fire and taking on more cash advance debt. So you have to really look at what is my last resort. Absolutely. I've had a lot of people who change processors because they're the smart ones who think about it a little bit, but others who just quickly, like, yeah, to protect the revenue, to protect the cash flow of the business so it's not intercepted with these lien letters and everything held up against you, is oftentimes you will have to change a processor. And it makes sense. You don't deal with processors, that's different. Like an example with restaurants, that's one industry. You're going to see that where you have to change the processor. Come to terms with that. Like, is the pain level there enough? Or you're going to continue to keep like somebody's giving you and giving you and giving you. And by the end, you got to go and you're like, oh, I'm just going to come back to them tomorrow. And I'm like walking in somewhere and I'm seeing that person just sitting at the table again, just continuing to take more. And oftentimes I have to think, is that my client? Is that my customer? Is the person on the side of that that's not doing that my customer? And that could be it. So it's different modes of thinking and ways of looking at things and saying, well, is that the person that I really want to help because they're not helping themselves? And they continue to just hide behind the scenes. And that's what most people do is like, I'm not here to pressure you into something. I looked at the numbers, I looked at everything. If I were the owner, I know what I would do. I have business development skills. Not saying you don't, or it's not up there, but I have a lot of financial acumen in a portfolio of what I've built. and I deal with investments with multimillionaires, billionaires. So I've seen a lot. So if you so choose to go your way, all the best, all the power to you. And if you try to do it in your own way to do a debt restructuring, if it's much more expensive, hiring a direct attorney or whatever you're trying to do on that, that's another thing to pay attention to. And if it makes sense or not, and the cost there. So looking at a cost dollar average and seeing where else I can look at to get started, this is a great way and an example I'm giving you. And like I said, oftentimes I find people who their ego, their obnoxious, their ignorance, their stubbornness, ignorance, all this stuff just gets in their way. And it saddens me because is that what they took the MCA for? Is it because of that character? And it's showing up here. And a lot of the times, someone who's adding too much MCA to stacking debt, it just is what it is. It's hard to say that the people who come to me have the right character. I'm not saying they don't, but you have to understand that I have to think about a certain expectation of a person who comes to me who has so much MCA debt and the expectations, the standards, the growth in a person. I'm not saying it isn't always there. I've met great people who have growth. It just so happens they have MCA debt and they didn't know better or they did. They just had to do it. But they've learned, they understood that now I want to act on this quick and I'm not going to say something and not do it because that's the last thing you want to do. It sounds good to tell someone something because they're listening to you and you're putting it out. You're almost venting. If you're venting, okay. So it sounds good and you're in motion. You're in motion though. You're telling me things that I don't want to just hear for the hearing of it. If this is something you want to go ahead and share with me and express, great. Nothing comes about it, great. That's fine too. But also don't contradict yourself and saying that I want to do something, but then you never do it. You hide. And I've had people who hide. And I don't want to have to follow up with you. It's already uncomfortable for me to have to. I will at times just to check in. Maybe something came up. You're out of the job. You're out at the job site. Things happen in life and in business. I get it. But if you're constantly neglecting something, your true character does show even more. There have been many moments where I've known people who have quality character or on their way there, and that's a person that I know I can trust. There's someone that seems and I know is loyal, or I've yet to get to know more to really see if they are, and I'm great at that. That's a gift of mine. I'm an observer. I'm not a talker. So I go into a room, I don't want to talk. I'm the observer. You want to ask me about someone? I know what true character responsibility is supposed to look like. When you have your habits, your routines, things like that. And that's what I look for is personal growth and development, self-mastery. That's what I can also offer in helping you with and so much more in a structured way of doing things, not just in business, life. So right here, I have everything up at the top. You see home services is what I showed you over here on my homepage. And again, my social media where I sometimes do a spontaneous live, I'll do some posts. I've been posting about MCA debt relief content, restructuring as being one of the options, sharing other options as you've heard of today. Here's another post document that I made for a video that I made too. I'll try to link you to that video down below. The MCA debt restructuring document so you can understand more details and why here with what is Viral Funding Solutions, why work with Viral Funding Solutions. And you can click right there, give it a second to load. Experience, versatility, integrity, loyalty, bonus. Here's a video version and more that I've made. Click here to get started with your funding journey. And there's plenty more. So if you want to learn about me, you can go right here. And then I could turn this around a bit. And then I was changing images not so long ago. I had a few things come up after that, so I had to pivot from that. So you can learn more about me, a lot of what I mentioned already today, my background, and you're going to find out, if you haven't already, that I've been doing this at a high level. And I'm telling you, not just high level in business, real estate, personal growth and development, self-mastery. I understand crypto, bond market, yields, the treasury, notes, bills, the housing market, labor force, all sorts of things you can imagine. And these are the things that I understand and I put into use because I stay quiet. Like I said, what is going to allow you to be at your very, very best. And I'm telling you, listen to a person who's quiet. I would say listen less to someone who speaks and speaks and speaks. Listen to the person who is quiet. Now you see me doing this video. It's tiring. My brain hurts. My eyeballs behind me feel like they're red. But I'm doing this for the value in helping you. Is having seen this for so long is people self-sabotage. They self-defeat. There are other ways out. Let me go over here. Like you could go through the bankruptcy. But like I said, I don't recommend that. That's not the first option. Usually it's the last one. And let me go down here. There's one of them there. Bankruptcy considerations. It's not always the first or best option. There are multiple lawsuits and judgments in companies I've experienced seeing so many businesses with severe cash flow, insolvency, collections, deposits, payroll instability. Different bankruptcy options exist. Chapter 11, you've seen Chapter 5s, Subchapter 5, small business restructuring, Chapter 7, liquidation, or personal bankruptcy considerations. It's great. It's not great at all, but it's the way to go for cash flow, legal exposure, assets. You're trying to protect liabilities, operational health, and the long-term viability of a business. There's many more, and every situation is unique. So you can look at a restructuring Article 9, reorganization, but that's not always recommended if you don't have the assets either for it, or dissolving and starting a new business and moving the assets over. There's a lot of different things, but the restructuring is the way to go. If you have any questions, comments, or concerns, please voice them for me down below in the description or in the comments. Yeah, voice it in the description where you can't leave a comment. In the comments, and if there's something in the comment, like the link to this, go there. If there's no comment that's pinned post, okay, it'll be in the description. Look down below in the description to get started. Fill out this form. I have a contact form on my site. You can go through and go there too. But for MCA debt and everything, to make things that easiest way possible, fill this out. It's not an application. It's for me to better understand, me to understand, and then email back in return a lot of the times. If it's a call, it's a call for certain things that I need just more clarity on that wasn't filled out here or not, or after the email, then I do, or it makes sense for us to. Uh, and in many cases, it's like, okay, I already know what I want to do. A lot of people just see my email. Yeah, I'll fill that out. Or I went ahead and already attached the application to the restructuring, but here are the other options. Or I can wait for the third email or the second email for that. But you'll see it and go, okay, now I have more clarity. And you can even message me on social media, send me a text. A lot of people text me, and or email me, and those are also very quick ways to do things. So that's everything from me. I hope you got a lot of value from this video. Look again down below in the description to get started with your MCA Debt Relief, Merchant Cash Advance Debt Relief solution and service and services. And know that, again, you have somebody behind you who's going to back you up. I'm not in it for doing massive volume. I used to do volume in the past with funding, but for a lot of years, I have been strictly quality than quantity. Quantity past quality of the human person, even if they're not there yet, you're not there yet. I want to help you get growth under you, not just in business, but as a person, as what I mean. And then understanding the business. So I can go back in time many years ago and recent, and then this year, and know about my people as people and in business. And it could be something as simple as an email that I know someone with. It doesn't have to be a phone call or stuff like that. And so I know my restructuring clients. I know my consolidation refinance clients. I know them as people. I know them in their business. I know I'm looking out for them. They know I'm looking out for them. I've communicated with many of them. Here's what you should ask for. Here's the case. Here's how we do this. Boom, 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 boom. And that's how you move through it along with more of a peace of mind and increasing your way of showing up in a better, more confident manner. So that's all for me. Thank you for watching. And yeah, thank you.